We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in everything Bitcoin. And in today's episode, we are going to be talking about Bitcoin rallying up to, over the weekend, to $28,545 and change. Oh my goodness, guys, it's so funny because last Thursday I made a video talking about how if Bitcoin broke through a certain transitionary zone, it would likely end up going all the way to $50,000 before the year is over. That video went out Saturday, right as Bitcoin began breaking through that exact transitionary zone. That zone is one that we've talked about extensively here on the channel over the last 3 months. That zone is between $25,236, which was a major level of resistance that we were struggling to break through, and then the top of that transitionary zone is sitting at a level called $28,545. That is a level that is set as the local low from June 22nd of 2021. That was 2 years ago during the bull market. We set that as an absolute low. That transitionary zone, based on all the analysis that we do every single day here on Coffee and Crypto Live, I believe, is the delineation, is the demarcation, it is the DMZ between accumulation and a bull market. And if we manage to get above that level, we, with obviously a few more confirmations, will be entering into what I dubbed in that video as well, the pre-bull market, the pre-halving phase of the bull market, which would likely lead us to us bouncing around this $28,000 to $42,000 region, moving through the end of the year. And then after the halving comes in, around April 14th of next year, we would likely see Bitcoin begin a major bull market all the way up to well over $100,000. I've outlined my entire journey that I think Bitcoin's about to go on over the next 18 months, and I do believe that it is pretty accurate. So if you haven't seen that video, you should go watch it. It got almost 40,000 views. So you guys really seem to enjoy that content. I'm really enjoying making that content. I had so much fun making that video that went up on Saturday. If you guys have not seen it, you should definitely go watch it. Had a great reception. It seems like it was very valuable to you guys. We also had 700 new people subscribe to the channel because of that video. So if you're one of the people that just watched that video and subscribed to the channel, welcome to Coffee and Crypto Live. We make a video every single week talking about Bitcoin's price, talking about different charts that help us to understand where Bitcoin is and where Bitcoin is going. And then every single weekday we go live here on Coffee and Crypto. So make sure you stay tuned for all the content that we have coming up. We got a great hour-long show coming at you today because there's a lot going on this week that we're going to have to dive right on into. So let's go ahead and read some chat. We've got Alex Nibo in chat, was the first one here today. Said good morning to you too. Alex Nibo, Rockin' Metal News, was second. Said hi Jebb, good morning. Oh my is in chat. Good morning everyone. Hope everyone had a good weekend. Hashtag FinSov. I absolutely had a great weekend. I managed to record the last two of the sermons at the gospel tent meetings that we were doing. Very, very, very good messages about our Lord Jesus, and we're very, very thankful for him. All right, Mike Lowry is in chat, being a mod and a first green name. So shout out to you, Mike Lowry. Thank you for your support and your kindness to moderate the chat for us. Said good morning, everyone. We've got Queen in chat, Grand Roofing Incorporated in chat. Let's see, DB, Rami Halawan. There's a few enough comments so far that I think I can read everybody's name. Queen said, love the Saturday video, Pastor Jebb. Thank you so much, Queen. Anthony Roldan said, sup fam, bam, we are dumping to support. We might be. We will talk about that, but I'm not sure where you're seeing that because we're actually up $200 since I actually made the thumbnail, so we'll see. Let's see. Hispanics KS said, let's get ready to crypto. I'm sorry, I forgot. I got to say that in the announcer voice. Let's get ready to crypto. Okay, that's how you do it. BTC Crypto Alert said, good morning, Jebb, and all. Silas E. Borg said, morning, dudes. Dan Nolan said, right now. Yep, good morning. James Stone, Beetlejuice, good morning, everybody. All right. Silent is in chat. Good morning, crypto fam. All right. Let's not delay any longer. Let's jump right on over to CoinMarketCap. As you can see with your eyeballs, Bitcoin is sitting at $28,148. Remember what we talked about. These drawings right here, I don't know if you'll remember, but last week I said, you know what, we'll just go ahead and leave these drawings on the chart. Actually, I think I said we'll go ahead and leave these drawings on the chart because I want to see if Bitcoin will play them through. And sure enough, Bitcoin did almost exactly what I'll show you this in a second, but it's really crazy how precisely you can predict what Bitcoin's going to do if you have a solid understanding of technical analysis. We'll get to this in a minute. I actually drew these lines. Let's see. I drew these lines that are on the chart right here. So we could only see this, and then Bitcoin decided to go ahead and go forward and follow the drawings almost perfectly. So we'll talk about that in a little bit. But anyway, Bitcoin is up 70% year to date. Let me just say that again. Bitcoin is up 70% year to date. Absolutely going crazy. Up 68% over the last 90 days. ETH not keeping up quite as well. It's up 47% over the last 90 days, up 48% year to date. Tether obviously tethered to that $1 mark as it should be. Binance sitting at 337 has not participated very much in this rally that Bitcoin has witnessed. This is something I've talked about. If you'll remember, we've talked about this a lot here on Coffee and Crypto, actually, that Bitcoin is likely going to be the one leading this market. Normally, in the beginning of phases of a bull market, it is Bitcoin that is leading the market, and everything else is getting left behind. Bitcoin has increased its market dominance from 37.92% on November the 29th of last year to where it is now at 43.78%. You do the subtraction there, and you're looking at nearly 6% increase on Bitcoin market dominance at the expense of some of the other cryptocurrencies, even, for example, the others category. Why is that happening? Well, quite simply, whenever Bitcoin begins a bull market, oftentimes it is beginning a bull market because people got confident in Bitcoin. They are not as much confident in the altcoins because oftentimes people get into the cryptocurrency space because they heard one of two names, Bitcoin or Ethereum. It's very rare that somebody gets into the cryptocurrency space because they heard another name, unless it's like a Dogecoin or something. But none of those big meme coins, those very popular coins, are trending right now. So more or less, if you're going to get into Bitcoin and cryptocurrencies, you're getting into Bitcoin or Ethereum, and most of that's going into Bitcoin. So it's a bit of a PR question, but it also comes down to the fact that Bitcoin has the most solid use case. It is the first cryptocurrency. I often call it the OG cryptocurrency, and it has the most obvious use case, especially in an era where we have conversations about Credit Suisse going on and Silicon Valley Bank going on, and people are worried that we're going to have massive bank runs taking place, and the FDIC is doling out money. Long story short, people are not as confident in the banking system as they were a month ago. Now, the thing is, if people are old enough to have a bank account, then that means that they were alive during 2008, and hopefully they would remember their lesson not to fully trust banks, even if the FDIC may come in and bail you out to the tune of $250,000. But many people do. So this is a little bit of a wake-up call for people that say, oh, wow, maybe self-custody is not such a bad idea after all. Yeah, I could lose my keys, but I'm pretty fiscally responsible. I got $3.2 million in Silicon Valley Bank that's gone, so maybe I should try putting it in Bitcoin, where if it's going to disappear, at least I'll know it's my fault so I can do something better next time, whereas you're not the chief executive officer of Silicon Valley Bank, so you can't really stop that nonsense from taking place. Not the point of this stream. The point of this stream is talking about all the people that are now flooding into Bitcoin as a result of those banking crises that are going on right now, but even more so as a result of the technical landscape and the inverse correlation between Bitcoin and the Dixie and the positive correlation between Bitcoin and the stock market. We'll jump into all of that in a moment, but for now, I just want you to understand that Bitcoin's market dominance is going up, and that is traditionally one of our early warning signs that we have our bull market coming into full swing. And again, if you watched yesterday's video, then you will have a much better understanding than the majority of the cryptocurrency space as to where Bitcoin is headed next. Now, I do just want to give you an update on BUSD because as we've predicted, Binance USD was eventually going to fall out of the top 10 and Solana was going to recapture top 10 territory. Solana is now $800 million in market capitalization above Binance USD because Binance USD has lost about $400 million in market cap over the weekend. Over the last 7 days, we've seen, not 400 million, $200 million in market capitalization over the last week. We've seen BUSD drop in market cap from 8.4 billion down to 8.2 billion. All the while, Solana has been doing exceptionally well during this rally. It is up, as you can see right here, it is up 8.17% over the last 24 hours, up 20% over the last 7 days. That equates to about a $4 increase on Solana. It's doing pretty well, and it's not surprising to see it jumping back into the top 10. I'm not a fan of Solana. I've never been invested in Solana. I think it has a lot of glaring issues that will disrupt its ability to be a long-term player in this space. But it does have a massive backing behind it, and whether that backing is vindicated or not, having a huge backing does give you some intrinsic value again, even if it's not merited. Anyway, moving on here, let's take a look at the Bitcoin chart. So like I said, I drew this chart on Bitcoin right here, about 10:30 in the middle of the live stream. And I said, Bitcoin's probably going to go through a rising wedge, which had already begun painting at that time, and is likely going to head all the way up to $28,548. Sorry, $25,545. If you will look, just this morning at 5 a.m., Bitcoin rallied to $28,567. Now, before you get on to me, because Jebb, your prediction was, what, $12 off, $19 off? That is less than 1/10 of 1%. The prediction that we gave was less than 1/10 of 1% off. And the reason that we were able to do that was because of an understanding of technical analysis. Bitcoin returns to the same levels that it has gone to before. Bible talks about how a person will often return to their sin in the same way that a dog will return to its vomit. And that's what Bitcoin does a little bit in a kind of a weird way, kind of a gross way, but it kind of does that. It goes to the same levels that it's gone to before. This is a very, very, very simple piece of technical analysis that we did. Tuesday, June 22nd, 2021, Bitcoin bottomed out at $28,548, and that was the floor. That was the bedrock of the previous bull market. Now it is the local high. I'll go to this chart, which you guys will have seen from the last video. You'll remember this. We talked about all the indicators indicating that we're about to go into a bull market. But if I just draw this level here at 28,545, then you will see, and even I could go to this chart because this chart was in the video. You can see this is the transitionary zone that you guys saw in that video that just went up on Saturday. This transitionary zone is the thing stopping us from getting into this zone right here, which is, again, as I talked about in that video, that is called the pre-halving phase of the bull market. This green zone that I have denoted up here is the bull market that we're likely going to go into. Somewhere in here, Bitcoin is going to be trading. It could do like this. It could do like this. It could go like this. I mean, it can go in a lot of directions. I mean, I suppose it can't go backwards, but it can go in a lot of directions. But before halving, it will likely go in this direction, somewhere in here. It'll likely stay a little bit under the weather before it's able to have the halving event come in, and then that will end up leading us into a very sharp bull market. Now, here's the interesting thing. Bitcoin is so bullish right now that it's actually broken above this uptrending level of resistance and turned it into support. So Bitcoin is just, how should I say, obscenely bullish right now. This is ridiculous, and this is bull market starting kind of stuff. In 8 days, Bitcoin rallied 8,400%. So, let's ask a couple of questions. Number one, why is Bitcoin rallying this far right now? Number two, can Bitcoin break through the transitionary zone and enter into that pre-halving phase of the bull market a couple months earlier than we initially thought may take place? Let's analyze that. First and foremost, again, why is Bitcoin rallying so much? Because to understand where Bitcoin is going, we first must understand the different factors that are impacting Bitcoin currently. If we understand what's impacting Bitcoin right now, then we'll have a far better understanding of what will impact Bitcoin over the coming weeks and months. So, why has Bitcoin rallied out of accumulation, as you can see here, into transitionary, pushing into pre-halving phase of the bull market? What gives? Why is that transpiring? Well, I would argue that there are a couple of very, very simple reasons. First and foremost, and I won't go into it too much because it's not the point of this video, banking crises, lead people to question the stability of the international monetary system. When people question the ability of the international monetary system to hold their funds in a safe, consistent way, then that makes them rethink things. Let me give you an example. There is a philosophy that the Americans introduced to the Japanese, that the Japanese, through the company of Toyota, perfected. It's called just-in-time production. Just-in-time production, basically, if you read the Toyota way, where they talk about Kaizen and Hoshin Kanri and all the different philosophies that the company of Toyota operates under, Toyota is hands down the best company, the best operated company in the history of mankind, to be honest with you. And one of the things that it does is called JIT, just in time. The rest of manufacturing has adopted this philosophy of just-in-time production, and essentially means that you have no waste. The idea of Kaizen is and it's a core value at our company, I got it from Toyota, is the complete elimination of waste in your life or in your company or in whatever it may be. So what is waste? Well, let's say you've got a car, and I'm just going to make up stuff because I'm not an automotive manufacturer. Let's say you've got an assembly line, and you've got 3 car bodies coming, and you've got 3 car bodies sitting there waiting to have the doors put on, right? You've got 2 car bodies that are sitting there wasting their time. Just-in-time production is this idea where you only want 1 car body coming through the manufacturing plant at a time. You don't want backlog. You don't want massive hordes of resources. During the pandemic, Toyota themselves actually started stockpiling raw resources. We're talking lithium, steel, glass, semiconductors especially. They actually started stockpiling things for one of the first times in their history. They've always had small stockpiles, but they normally don't maintain huge stockpiles of things because that's just a bunch of capital that's sitting in a pile somewhere that instead they could deploy into hiring new team members, that they could instead deploy into building a new factory, or instead deploy into being more efficient. Well, during the pandemic, Toyota decided that they actually wanted, for one of the first times in their history, to really start aggressively stockpiling stuff. And they did that despite 60 years of philosophy of don't stockpile stuff, because then you're just putting a huge amount of capital in a pile somewhere and wasting it. This is all time back into Bitcoin. I'm just giving you an analogy, a story that might make it a little bit more obvious the way the world is changing and the way that Bitcoin, that people are starting to hedge their bets by putting them into Bitcoin. Toyota themselves during the pandemic actually started stockpiling semiconductors. They started stockpiling steel. They started stockpiling glass. They started stockpiling plastics that they would use in leather, different things that they would use in their automotive manufacturing. Why did they do that? Well, because they realized that the just-in-time manufacturing model necessitates a stable world. It necessitates stable manufacturing and supply chains around the world. It necessitates stability. You cannot have just-in-time without stability, because a just-in-time system is extremely fragile. Another thing that the Toyota Motor Manufacturing Corporation employs is something called an andon cord. It's a cord that runs along the entire manufacturing line, and anybody at any time can reach up and grab that cord. And it's like on, you ever watch the Polar Express? They've got that cord and they pull it and they stop the whole train. When you pull the andon cord, the entire manufacturing plant shuts down. There might be 30,000 people working there. That entire line stops because there's one problem. They stop the entire line to fix the one problem. That's a very fragile system, because if there's a bunch of problems, then you just have to stop the line and it never starts again. That's the fragility of a system that operates in just-in-time. The rest of the manufacturing world adopted that philosophy, and so the entire manufacturing supply chain of the rest of the world was extremely fragile. And over the last 3 years, we've started adjusting manufacturing-wise from a just-in-time model that's very fragile but extremely efficient because of the stability of the global world order to a just-in-case model, where we have more hedging of our bets, where we have bigger stockpiles, where we have maybe the same factory but built in 2 different locations in 2 different geopolitically dispersed regions that are not going to interfere with each other. You might have a manufacturing plant in Mexico and in China, because if something impacts China, it's probably not going to impact Mexico that much. That's how the average American is looking at things now. I'm here to tell you that is the way that manufacturing has been moving the last 3 years, from away from just-in-time, which is a highly efficient model. It's one of the things that's brought prices down so much in the 21st century, and it is entirely predicated on the United States guaranteeing freedom of navigation on the open seas and guaranteeing that there are no major conflicts in the world. That ended with Russia and Ukraine, however. The pandemic started it. That war continued it. If the Chinese invade Taiwan like they want to by the end of the 2020s, then that will absolutely obliterate any kind of geopolitical stability from which companies can build international manufacturing and supply chains upon. The manufacturing industry, which is basically the thing that drives the entire world, started shifting from a total just-in-time model to a just-in-time and just-in-case model. Americans over the last 12 months have started doing the same thing in their own lives. That's the whole reason I told that story, was so that you can understand what Americans are doing, what the average American retail investor are doing. Now, the institutions have already started doing this. The average American retail investor is doing this now as well. And when they see Silicon Valley Bank drop, instead of saying, wow, we have stability, we have this air of confidence about our banking system, we have this air of confidence about our dollar, there's less stability. There's less confidence in that order, because whether you agreed on hot button issue A, B, or C in the political realm, you could at least agree, hey, we all use the US dollar. Hey, everything's actually pretty cheap compared to what our grandparents had to deal with 100 years ago. Hey, we don't have to worry about getting drafted and going into World War III because things seem pretty stable right now. That's out the window. Inflation's through the roof, and it's going to stay high, by the way. It might drop down to 3%, but it's going to stay over 4 or 5% for the next 3-4 years. Guaranteed. Almost guaranteed. Of course, we can't actually guarantee anything. Excuse me. Maybe that was a prideful statement. But as far as we can tell, with extreme confidence, it will stay that high. And people are now having their confidence shaken in things like PayPal because of some of the policies that they've put out. People are having their confidence shaken in social media platforms because some people like it, some people hate what's going on with Twitter. Now people are having their confidence shaken in banks because there seems to be another looming banking crisis. People are having their confidence shaken in the housing market because the housing market is dropping. As a result of the interest rates being so high and the rolling off of treasuries and mortgage-backed securities, especially the mortgage-backed securities from the Fed with the balance sheet. We have a video on that. That video is titled, How the Feds Plan to Burn $9 Trillion. Go watch that video if you want more information. All of that leads to this feeling of instability in people. And Bitcoin thrives on that. Let me say that again. All of this is leading to a feeling of instability in people. And Bitcoin thrives on that. We have been spoiled rotten. I don't care how old you are. I know we probably have somebody watching this video that's 100 years old. If you are alive today, then you have lived in the most stable period in human history. Despite World War II, despite all of the terrible travesties of the First and Second World War and the Cold War, that was still, believe it or not, one of the most stable points in human history. The most stable period in human history was from the 1950s to about 3 years ago. That has been taken for granted because it has been taking place for a lifetime now. All the people that grew up in the 1800s are gone, except for maybe one. There literally might be one guy that was born in 1899 that's still here. They're all gone into history. People only remember stability. And when it gets shaken, people get scared. And when people get scared, they look for an alternate solution. And I'm also here to tell you today that Bitcoin was the solution that was designed for just that cause. It was designed for just this purpose. Bitcoin was built in 2008 because Satoshi Nakamoto, whoever he, she, or they may be, realized that this is a very fragile system that we have. It's a ridiculously efficient system. Make no mistake, the way the modern world works is insanely efficient. You mean to tell me that you can get a hamburger for $1.29? Now, it might give you God knows what, but you can get food for $1.29, and every ingredient from that came from 5,000 miles away, and you can get that for $1.29. That's a highly efficient system. The more efficiency you have, oftentimes, the more fragile you are. And that's the world we live in right now. We live in an extremely fragile world. Study the Bronze Age collapse. Here's an idea. Go watch a video on the Bronze Age collapse. That'll scare your socks off. Anyway, Bitcoin was designed for that system because Bitcoin is not fragile. Bitcoin carries the same level of efficiency where it matters. I'm not saying it carries the exact same amount of transactional throughput or the same amount of speed or the same amount of whatever. But where it matters, Bitcoin carries the same amount of efficiency in that you can send a transaction anywhere in the world in less than an hour for zero money, for basically zero fee. You might not be able to send many of them, but you can send transactions anywhere in the world over the internet basically for free. And it's completely and totally unhackable. If you get your Bitcoin hacked, it's because you made a mistake. It's that simple. I mean, it really is a very humbling industry, isn't it? All the while being the just in case. It's the glass box where you say, break in case of fire. It's the, you do this. When I was in third grade, I was very curious, and I saw this red box on the wall, and we're up on the 8th floor of a parking garage, and we're walking in with the groceries. I used to live in Myrtle Beach, South Carolina. And I think we were staying in a hotel, actually, and we were walking in. And so I, in my awe and wonder, walk up and I just say, what's that? And I grab that and boom. And then about 5 minutes later, I hear, wee woo, wee woo. And about 7 fire trucks. I don't know why, but they sent the whole fire department, probably because we were in a high rise. They sent the whole fire department, and they all came up here. And they come and they start talking to my dad. My dad's just like so embarrassed. He's like, I'm so sorry. I'm so sorry. My son, I was unloading the groceries. My son, he pulled the lever, and I'm over here saying, I'm so sorry. I pulled the lever. I didn't mean to. And all the old people come out, and it's Myrtle Beach, so you got all the snowbirds coming out. And you just have all these people walking out, and they're all just looking at me. And I'm just sitting there like, I'm sorry. And that's what Bitcoin is. Bitcoin is that. Now, there's plenty of people that play with it just for the sake of having fun, but that is the just in case. Bitcoin is the just in case for the monetary system. So why is everybody flocking into Bitcoin? That's why. Because people are losing confidence in it. Long-winded way of saying people are moving into Bitcoin because they want a just in case. And that's where a lot of the market volatility is coming from these last couple of days. But I'm also here to tell you there's a few other places that it's coming from as well. Now, guys, we've got almost 800 people watching live. And to my understanding, we have, let's see, I will go to the stream here. We have only 155 likes. I think we can do better than that. I think we can get to 400 likes, guys. Smash that like button if you're enjoying today's stream. I really appreciate when you do that. All right. Now, of course, that is kind of the philosophical, macro, geopolitical implications of why so many people are flocking into Bitcoin right now. Hopefully that will continue. The issue is in 2 weeks, people will have forgotten about Silicon Valley Bank, so they will have forgotten the reason that they jumped into Bitcoin right now, and they may have a hard time staying in crypto. But luckily, there's a couple of other things driving Bitcoin as well. First and foremost, boom, stocks. Check this out. Stock market is rallying over the last week. Ever since last Monday, stocks are up 3% on the SPY. In fact, at a local high, they're up 4.26%. If you overlay that over Bitcoin, I'll show you that here on my chart. If you overlay stocks, on Bitcoin here. Now, they haven't opened yet. Or excuse me, they have opened. They just opened. You can see they're generally trending to the upside. You can see the correlation here between stocks and Bitcoin. Just take a look here at the transitionary zone, because, of course, stocks were closed. But this right here in between these two boxes right here, this is the transitionary zone where stocks were closed and where they reversed. Everything before this line, the stock market, the SPY, was going down. Everything after this line, stocks, the SPY, have been going up. Notice there's a very serious and obvious transition that took place here. Bitcoin was moving down with stocks. Now Bitcoin is moving up with stocks. Tricky thing, this is a short-term implication for the Bitcoin market because stocks are likely not going to continue rallying. Stocks are currently in the middle of and let me just see if I can find I haven't used it in a while, so let me see if I can find my curve. Stocks are in the middle of this giant curve to the downside right now, where they're doing this. They are absolutely collapsing, and the stock market is not being helped along by the Fed right now, and the stock market is absolutely not being helped along by the funds rate, and is not being helped along by a lot of different factors. So stocks are under just this catastrophic collapse over the last month and a half, and that's probably going to continue. The stock market could very well break bullish out of this. It can and will happen eventually. I don't know if that's going to happen right now. I mean, it's probably going to trade sideways out of here. But if so, at best, it rides on this uptrend. It will probably come down to 373. And as we made a video a little over a week ago, I would encourage you to watch it. It's called How the Fed is Making $17 Trillion Vanish. I believe that the stock market could go as low as 337 on the SPY. It's actually already almost gone there. It went to 345. That's not even that far away. And we'll probably go back down there again as a result of the high interest rates, as a result of the housing market struggling, as a result of the war in Ukraine, as a result of tensions mounting between China and the United States, as a result of famines that are coming in the second half of this year, as a result of geopolitical instability and supply chain manufacturing instability, as a result of the balance sheet being rolled off, as we spoke about in that video 2 weeks ago, how the Fed's plan to burn $9 trillion, and also as a result of the banking concerns. All of those factors lead people to worry about their stocks. Oh, and by the way, I also didn't mention the biggest driver of stocks right now, which is even bigger than the balance sheet, although the balance sheet is definitely a big one. But this is the longer term. This is the climate of it. That's the demographical concern. The average boomer now has aged into retirement, which means we're having millions of people every single year age into retirement age between 65 and 67 and a half years old. And so that means that they have to liquidate their stocks to pay for their cushy lifestyle in Florida, with their beach house and with their golf cart and with their little scooter, their little Vespa, because they want to feel young again like they're in college. People are liquidating their stocks to maintain that lifestyle. And look, more power to them. I don't have a problem with it. That's just the way it works. When you age into retirement, generally, no, I'm not going to ever retire, but when people age into retirement, then generally they liquidate their stocks and they put it into cash and T-bills and they spend it at a very low rate. They don't spend a lot of money in retirement. So they bring down the consumption, they bring down the production because they're not in the economy, they're not working, and they bring down the investment capital that's in the market because they're taking money out of the investment market. So all of those are compounding into one of the biggest, most profound drops in stocks that we have seen since before 2008. What? Jebb did not just say that this is a more profound collapse than what we saw in 2008. Jebb, hold your horses. In 2008, we dropped 56% on the SPY. Right now, we're only down 21. If we drop 56%, we would see the stock market, the SPY drop down to 198 points. I'm not saying necessarily the stock market will drop that low, but if it did, you would see $30 trillion evaporate. What I am saying is that this was the... What's the word? The after one is the aftershock. This is the trimmer. 2008 was the trimmer for what's coming up. And luckily for us, what's coming up is probably not all going to happen in 3 months like the pandemic did. It's probably going to happen over the course of 5 years. But we're having to see this readjustment where the market is no longer following huge amounts of quantitative easing, flatlined interest rates at 0%, and geopolitical stability, because all of those things are fragile. They're all fragile, and they're all collapsing. Every last one of them. Interest rates are high. Balance sheet is correcting. Geopolitics is at its most unstable level since 1939, and the business world knows it. The stock market is going to have a very hard 5 years. So, while Bitcoin is rallying short term as a result of the stock market having a rally, that rally is most likely a very short term outlier. So, keep that in mind. This is very likely a short-term outlier. Unfortunately, as much as I would like it to be a big rally, even if we rally for 6 to 12 months, that would probably be the counter trend against a larger trend to the downside as the world has to readjust to a new world order circa 2023 because things are changing. Now, the other reason that Bitcoin's rallying is actually pretty straightforward and obvious, and it is this. This is called the Dixie. You guys have heard it 100,000 times on this channel. It's called the Dollar Currency Index. It measures the strength of the dollar against a basket of other world reserve currencies. I literally just need to get a button right here where I can press a button and it will say that explanation, because I've explained what the Dixie is about 100,000 times on this channel. Anyway, the Dixie is moving to the downside. And as you know, Dixie is negatively correlated to Bitcoin. Whenever Dixie's going down, Bitcoin's going up. Don't believe me? Check this out. Dixie's been dropping ever since right here. So you can see what's taking place. Dixie started dropping, Bitcoin's going up. So let's just look at these boxes. This vertical box is when stocks started rallying. Everything past that's a rally in the stock market. This vertical line is everything since the Dixie has started dropping. You can see Bitcoin is, for the most part, doing very well in that regard. We also see Silicon Valley Bank, having a field day with the FDIC, and then you also see the effective federal funds rate about to drop in 2 days. We're going to talk about that in a moment. People are excited about that. And you see that the CPI dropped 0.4% from 6.4% down to 6.0%. Paradoxically, people want to buy Bitcoin when inflation is low. I don't really get that because Bitcoin's whole purpose is to combat inflation and to bring financial sovereignty to the masses so they don't have to be taxed by inflation. Nevertheless, that's what's taking place. People are interested in Bitcoin when inflation comes down, likely because of the stability variable. But also, if we go to CME Fed Watch Tool. Go type that into Google with me. Click this button right here. You can see the next FOMC, Federal Open Market Committee meeting, is in 2 days, 4 hours, 26 minutes, and 37 seconds as we watch. This is a very important tool because this gives us the probability, and it tends to be accurate, very, very, very accurate. This gives us the probability of what the effective federal funds rate is going to hike to or drop to, etc. Currently, we're at a range from 4.50% to 4.75%. The likelihood right now on the board, according to their panel of experts, is that there is a 68.6% likelihood of a 25 basis point rate hike. I would absolutely throw my hat in with at least a 25% basis point rate hike. Why? Well, the Fed sees the same thing that I talked about on Friday with the CPI. Inflation is not going to come under control all that easily. It's not as simple as raising interest rates, shrinking the balance sheet. The more complicated way that you have to get inflation under control and have a stable dollar, it does not depend on the Fed. It depends on the United States military and leadership in the executive branch, because the threat right now is the offlining of the nation of China when Russia's already offlined itself. By the way, this is a topic for another day, but do you know that Russia's entire oil industry might be disappearing in the next year? That's a long story. Anyway, China's in a similar boat. They are very likely to be offline as a modern functional economy within 10 years. They are likely to be less than half as powerful, maybe less than 2/3 as powerful, maybe less than 1/3 as powerful as they are right now in a decade as a result of their Let's just run down the list here, and I won't have time to explain any of these because each of these is a 30-minute video. Their water crisis, their housing crisis, their demographical crisis, their cult of personality leadership crisis. It's a miracle that China is as successful as it is. Their food shortage crisis that they are always on the brink of. Their raw resource crisis. Their naval dominance crisis. They're completely encircled by the United States, and 80% of their trade flows through the Strait of Malacca, which the United States could blockade with one aircraft carrier. Heck, they could blockade with 3 destroyers. And China loses its entire artery, and they go into a famine that kills 400 million people in a year. Obviously, I don't want that. I don't want anybody to die. But the point is, China is in a ridiculous... There's a lot of games where you have a very powerful player, and but they're very, very weak, so if they get touched, they just lose it. They're called glass cannon characters. That's what China is. They're a glass cannon. They're very powerful militarily. One of the most powerful militaries and nuclear forces on the planet. Third in nuclear forces behind Russia and then the United States. Probably second in military not prowess, but military might to the United States. But they are a glass cannon because they are ridiculously fragile. Because they were to launch a war on the United States or on Taiwan, they vanish. That's the problem that the Fed has to figure out how to deal with, because China is disappearing whether they attack Taiwan and go to war with the United States or not. They're disappearing this decade. That offlines their entire manufacturing sector, and you've got to rebuild a manufacturing sector that employs 250 to 500 million people around the world quickly enough that you don't start regressing as human civilization. You tell me that doesn't cause inflation? What drives inflation? The increasing in prices. You cannot make an Oreo for the same amount of money if you have to rebuild the entire freaking factory. Because the factory costs most times way more than the raw resource inputs that you put into whatever it is that you're making. It's a bit like a nuclear plant. To build a nuclear plant, you don't spend very much money at all on the uranium. Uranium's very expensive, but you don't spend much money on that. You spend the money building the thing. Because there's got to be so many layers of containment and protection and all of this. It's the upfront cost. To rebuild the entire manufacturing plant that's based in China and Southeastern Asia and rebuild it in the States and in Europe and in parts of Africa and in South America, that takes 5 years, and it increases the cost of goods by 50% on average over the next 3 to 5 years. You don't get that kind of inflation under control with the effective federal funds rate. Tying it all back in here, because now you're going to see where I was going with all of this. The reason I was talking about that is because we're going to see most likely a 25% basis point rate hike. A lot of people think they're going to stop at 5%. The Fed is most likely not going to stop at 5%. Why? Because the Fed doesn't have a navy. The Fed doesn't have the ability to go and put China in their place, or to go and help prop up China so that they don't collapse as a modern economy and give us 5 more years to rebuild the manufacturing plant. Whatever it is you want to say, the Fed doesn't have that tool. They have the effective federal funds rate, they have the balance sheet, and they have a few other pretty powerful tools, but they don't have those tools. They don't have the tools to solve the problem, which is a demographical issue and the collapse of globalization that has driven modern human civilization for the last 75 years. They don't have those tools, so all they have are Band-Aids. The Band-Aid that they have access to is the funds rate, because they can stimulate the economy by slamming that to the floor during the next crisis. Mark my words, guaranteed, this is something that I will guarantee you, if the Chinese declare war on the United States and on Taiwan, or on Taiwan, the United States declares war on China, however it works, then they will probably drop interest rates to 0 overnight, and they will do so because they're going to need to give any kind of stimulus that they can to the United States economy. Is it going to work? No. The problem that the Fed's running into is that they are trying to solve, right now they're trying to solve a problem that they created through the printing of money. Now, you can argue all day about whether or not the printing of money was necessary to save the economy during the pandemic. Some of it may have been. That's not the point. Right now, they're trying to solve that problem while preparing for the next problem. The issue is they kind of can fix the problem of inflation because they're the ones that created it, right? If you get bit by a snake and you walk into the hospital, you're the best person to ask what kind of snake it was and what it looked like, because you were there. The Fed is the one that caused the inflation that the United States is experiencing right now. Again, whether or not they should have is beside the point, but they're trying to fix that. They actually kind of can get the balance sheet increase and quantitative easing driven inflation under control because they created that. The problem is they can't stop what's coming. They can't stop what's coming geopolitically, demographically. They can't stop that. So they're likely going to continue raising interest rates because that's all they can do. It's like going to a high school nurse and you just got, like, I don't know, somebody like got funny with a katana and has like, you got like a giant cut in your side. The hospital nurse can give you a Band-Aid while the actual ambulance shows up. They've got a Band-Aid and a lollipop for you. That's all the Fed's got for the United States economy right now. Because this is not a problem, the one of intrinsic inflation in the fact that the manufacturing plant has to rebase itself. That's an intrinsic problem that the Fed doesn't have the tools to fix. So they can potentially stop and reverse the quantitative easing and turn it back into quantitative, stop and reverse the quantitative tightening, turn it back into quantitative easing, increase the balance sheet, which would only make the problem worse. That's like giving a blood thinner to somebody who's bleeding out. Or they can increase the fund rate. They're probably going to end up increasing the funds rate to 5, 6, 7, 8%. That will likely cause a crash in the housing market. All of these instabilities, all these factors that lead to instability lead to two things in Bitcoin. Number one, they lead to the Dixie probably continuing to rally. Why? Because if the world is undergoing this kind of catastrophe, the dollar is the currency that is best positioned to survive and thrive in that ecosystem. Every other currency, you call it the yen, the pound sterling, any one of the 17,000 pesos, all of those currencies are going to be inflated more and not perform as well as the United States dollar, which means in general, the Dixie, the dollar currency index, is very likely to have a major rally again here in the next year or two, which will make things harder for Bitcoin. And it also means that the Fed is probably going to keep increasing the effective federal funds rate, making capital costs higher, making it harder for people to invest in Bitcoin on debt. Now, there's two implications of that. Number one, if people are investing in Bitcoin, it means they're probably investing in cash, which means they're probably not investing money that they can't afford to lose, which is a good thing. But it does mean that the basically tech industry that we built in the cryptocurrency market on the back of all this debt is kind of disappearing. People are going to have to start bootstrapping. That's what we did at our company. We never took on a penny of debt to build this company. We always bootstrapped it. We made money and then we spent it if we needed it. We didn't take on loans. We didn't take on angel investors. We didn't do that. Had no reason to. We had a vision and we believed that it was going to work. And that's what's going to have to happen in crypto. And in a way, it may drive innovation, but that innovation will struggle to find the capital to actually cause it to flourish. So, how does all of this tie into the point of this stream, which is Bitcoin goes to $50,000 if it rallies another $700? Well, let's talk about all of these factors. I've kind of talked about three major factors. I've talked about the geopolitics, the stock market, and the Fed. Let's back up. Bitcoin goes to $50K if it rallies another $700. If it rallies another $700, Bitcoin is above $28,545. That means it's breaking into the pre-halving phase of the bull market, and it will likely get a huge boost of enthusiasm just from that. There are trillions of dollars sitting on the sidelines right now of people that are bored. They're bored. They don't want to be in Bitcoin because it's boring. That is, by the way, that is a terrible investment philosophy. This is boring, so I'm not investing in it. Bitcoin is not a video game. As much as there is crossover between the gaming community and crypto, this is not a video game. This is not about investing because it's interesting. Most of the time, the best investments are the ones that are boring. Bitcoin was boring when it was at 16.5. If you had a bought then, you'd be very happy right now. Okay, but oftentimes it is best to buy things that are boring. But many people and many companies even fall into that, and they invest in things that are interesting. So they're going to be more likely to invest in Bitcoin after it's above 28,545 because CNN's talking about it, because CNBC is talking about it, because the New York Post is talking about it, because your favorite political pundit is talking about it, because it goes on Ellen DeGeneres' show like it did in 2017, because Dude Perfect makes a video, whoever makes a video about it, and then it gets a ton of interest because it's trending. That could add $10,000 to the price in a month. We've seen that happen before. That could drive Bitcoin very high. But geopolitically, many of the concerns that I'm talking about geopolitically have not reared their nasty, ugly, disgusting head yet. There is a very large concern of famine in the second half of this year as a result, and I don't say that with any kind of joy in my heart, because famine is one of the most horrible things that can happen to a country, to a person. And the reason I say that is because there's a huge tightening right now on the fertilizer supply chains and on just food supply chains in general, the output, not just the input, around the world. That leads to crisis. We have the potentiality of Russia launching another offensive in the spring with 800,000 men. Now, sure, they might be running at the Ukrainians with clubs, wearing like a cloth tunic, because that's all the Russians could afford to give them. But when you have 800,000 dudes running at you, even if they look like barbarians from Civilization 6, then that's still a scary thing. That leads to instability. The Chinese offlining themselves and basically saying, Xi Jinping basically went on the world stage 2 weeks ago and said, hey, United States, you keep doing this, there's going to be a war. many of these things that are brewing right now don't start having an impact for 6 to 12 months at least. And so because of that, Bitcoin's probably going to have a little bit of a grace period where inflation's coming down. The effective federal funds rate's at 25% basis point rate hike whenever they hike the rates. And so people get excited. They're like, oh, yippee, it's only a 25% basis point rate hike. All the while, the United States Federal Reserve is still hiking rates at one of the fastest rates that they've ever done in the history of their existence. But people somehow take that as a bullish thing. I don't know why. All of that to say that many of the implications of what I'm talking about don't start having their full impacts for 6 to 12 months, at least, if not the next 3 to 5 years. That gives Bitcoin this kind of grace period where it can get started and get its footing before the halving comes into place, and then Bitcoin likely takes off of its own merit, despite the geopolitical realities that the United States and the rest of the world is living through. All of that to say, if Bitcoin gets above 28,545, I think Bitcoin will end up doing a very, very, very good job of rallying up to the 30s and then potentially even higher. So let's look at the technicals. Let's look at the actual chart here for a moment. By the way, if you're watching today's stream and you've not hit that like button, I would encourage you to hit the like button because it helps to support this channel. And I really appreciate all of you guys, and that would be a way that you could show your appreciation to us. But if you don't like the video or if you don't feel like going down there and clicking the like button, just your view is appreciated enough. So thank you so much for being here. All right. Let's look at the chart. Let's bust out some TA. We've got Lux Algo that I want to show you on the daily chart. Let's make sure that we have everything turned on here. We do. Whoo-wee, look at this. Bitcoin is in lovely territory. Hopefully you guys can see this a little better than I can. I'm colorblind, but hopefully you guys can. I guess I'll go to a different chart. Let's look at this chart. You see Lux Algo is here. This is the chart where we had that prediction. Lux Algo bounced off of its EQ cloud, had a strong buy signal, rallied very fast. We've rallied all the way back up to the reversal zone. The reversal zones, we're sitting here. We actually jumped out of them in January. This was an early warning sign that something was going on in the market. We were concerned about 2 weeks ago that things weren't going to turn around, but then a few things happened. Number one, big CPI drop. Number two, banks start going belly up, driving people into crypto. We love to see it. And so, well, we don't love to see banks going belly up. That's a very bad thing, but we love to see people coming into crypto. And so now Bitcoin's trading up here at the top of the reversal zone. Bitcoin has a couple of options here. Either one, it can go absolutely parabolic and rally another $10,000, which is possible because there is, guys, I'm not kidding. There is so much money sitting on the sidelines. You want an example? We've got $76 billion sitting in Tether. If you deployed 20% of that, $15 billion into Bitcoin, $15 billion of buy pressure could drive Bitcoin's market cap up $50 billion. We have in stable coins over $100, not million, billion dollars sitting on the sideline. $100 billion does not drive Bitcoin $100 billion in market capitalization. No. That's not how that worked. There is gains in there. This is not a zero-sum game. These are markets with market capitalization. You put $10 billion in buy pressure into Bitcoin, unless you have an equivalent $10 billion in sell pressure, then you can drive that market insanely high. You could double the market capitalization of Bitcoin with $10 billion if there was no sell pressure, just by buying up all the sell orders. If you were to do that, you could drive Bitcoin through the stratosphere. There is so much dry powder. All the on-chain analysts have been telling you this for a year. There is so much dry powder sitting on the sidelines right now. Even just in Tether and USD coin, we've got $112 billion waiting to be deployed. Binance USD, it's still got $8 billion that's waiting to be deployed. All the other stable coins and all the money sitting in cash, there's probably $250 billion waiting to, boom, jump into crypto. $250 billion in buy pressure probably adds $1 to $2 trillion in market capitalization, which could drive Bitcoin back to all-time high and beyond overnight, theoretically and metaphorically. I don't literally mean overnight, but in the grand scheme of things, it could happen very quickly. If Bitcoin gains the confidence of the bulls, and it gains the confidence of the people sitting on those, on that dry powder who are not looking to make ridiculously risky investments where they're buying it at, they're buying, or not making ridiculously risky investments, but they're not looking to make very low investments, but they're looking to buy into a bull market after confirmation, which there's a lot of money waiting to do that. You get above 28,545 with confidence. You're trading at $32,000. You have some of the indicators coming into play that we talked about on last weekend's video, where you have the buy signal on the weekly chart. You have a golden cross on the daily. You have RSI crossing bullish, MACD cross bullish. You've got the moving averages moving in the direction you want. You've got all of these factors. You've got oh wow, I just noticed that. Okay, we got to make a whole video on that. There's a confirmed buy signal on the weekly chart. Phew. Whew-wee, I don't know how I didn't notice that. That's a big deal. Wow, we'll talk about that in a little bit. So, okay, so there you go. Confirmed buy signal on the weekly chart. All of these different factors taking place. People get a lot more likely to buy Bitcoin because they are excited to see Bitcoin above local highs. I'm sorry, that threw me off. That is a bull market confirmation. It's one of the last ones I was looking for. All right, well, I guess what we were saying about Bitcoin getting above 28,545 really is the confirmation of a bull market we need. Guys, the point is we're days away. We could be minutes away from a bull market. We could be entering this at any moment. Even today, I would encourage you to be paying very close attention to the market because we're in a rising, an ascending triangle pattern right now. And if we break above 28,545, guys, that's it. Like, we're gone. We're going. That's T minus 0 seconds, guys. That's booster ignition. Bitcoin's on its way. It just needs to make sure that it doesn't have some kind of black swan come in. I would say the big thing you need to watch for this week is the CME Fed Watch tool. Go here, go to cmegroup.com/markets/interest-rates whatever. You can also type in CME Fed Watch tool into this wonderful thing called Google, and it will be the first thing that comes up. When this 25% basis point rate hike drops at 2 p.m. on Wednesday, I think it is, then you're likely going to see quite a lot of 3 p.m. I think it is 3 p.m. on Wednesday. You're going to see what was it that Doc Brown said? I'm not going to quote him because he cursed, but you're going to see some serious stuff. You're going to see it really start to move based on how Bitcoin responds to that. My prediction is that if we have a positive response to the CME, the Fed funds rate coming in at 25 basis points, you're going to see Bitcoin over $30,000 by the end of the week. Let me say that again. If you see a positive response to the CME group, the Fed rate coming in at 25 basis points, you will see Bitcoin trading at over $30,000 by week's end. So that's exciting. And so I guess what I'll say here is that it seems, anyway, that we're at the beginning of a bull market. A couple of things. Number one, if that doesn't happen, be patient because it will. Bitcoin is one of the most revolutionary pieces of technology that we have created as humans this decade. It is one of the most influential pieces of technology we've ever created in the financial space. Bitcoin is on par with the creation of paper money, banks, internet transfers, and other technological revolutions of the like. And it will thrive. I'm very confident of that. Bitcoin will thrive, very much so. So if it doesn't, for some reason, get to $30,000 by the end of the week, if it for some reason drops down to $17,000, don't fret. Bitcoin's done this before. There have been times where it has attempted to go through a giant breakout and start a bull market, and it just didn't manage it. We saw the same thing happen here. In mid-2019, we rallied 300% in 5-6 months. Bull market didn't start for another year. We saw a similar thing take place here. We saw Bitcoin rally during this accumulation phase, which is what we're in right now. We're still in accumulation. Don't forget. We rallied 42% in 35 days, and then Bitcoin crashed 50% in 40 days. But then Bitcoin started the bull market. It broke through its transitionary phase. You can see the transitionary phase of this accumulation phase. You see the transitionary zone, not phase, of this market right here. We broke through into the pre-halving phase of the bull market. We're about to do the same thing. You can mark my words. Bitcoin will be in this zone in the next 6 months, more than likely. But if for some reason it's not, let's say China declares war on the United States and you get 1 million men drafted into the United States Army and that just decimates financial markets. Fine. It takes a few more years. But Bitcoin is going to thrive. And if Bitcoin does break up here, just remember, guys, the killer of your success is your emotions, even if they're good ones. So don't let your FOMO drive you. Let the technicals and let logic and facts drive you. And believe in the why of Bitcoin. There is a certain component of this purpose of Bitcoin is here for a reason, and I believe in it. There is that. I'm not talking about get rid of the ideology, if you will. Now make sure if you're going to have an ideology that's a good one. And I do believe that Bitcoin is a good thing for humanity. But keep your emotions out of it. Keep yourself patient. As I talked about in the video that went up on Sunday, stay patient and stay ready for anything. Stay ready for a massive rally. Stay ready for a massive crash. Make sure your security is top notch. And also, by the way, guys, that's where one of the things that we've been working on for a very long time comes into play, and that is called Club Defi. Guys, I want to introduce you to something. This is called Club Defi's Principles of Technical Analysis. You can find it by going to bitcoinacademy.teachable.com. You can find that link at the top of the description. And this is a series of over 60 videos in an academy where I teach you everything that you need to know about technical analysis so that you guys can do the kind of analysis that you just saw me do in this live stream. If you want to do the kind of analysis that I just did in Club Defi's Principles of Technical Analysis, I'm going to teach you all of it. Everything that I know, I pour into this academy in the subject and principles of technical analysis. If you want to learn about technical analysis, I firmly believe that this is the single best place in the crypto market to do so. And I don't, it's almost hard for me to say that because I just don't want to be prideful. But listen, guys, the predecessor to Club Defi's Principles of Technical Analysis, CT2A, had over 5,000 students who were learning technical analysis, and it changed lives. We got emails almost every single day from people saying, I managed to get myself out of poverty. Me and my sister who were on the streets, and my mother died of a drug overdose, and we're homeless. I managed to make a little bit of money and get some stability for myself, and my little sister who's 13 years old. We got all kinds of stories like that. We got stories of, there was this guy who was going through a divorce. We've got all kinds of stories of people that went through CT2A and learned technical analysis and changed their life. And Club DeFi builds on everything we learn in CT2A, and I think it's a superior product that has taken us to the next generation of learning technical analysis. And so if you want to learn technical analysis with thousands of students, then you can do so through Club DeFi's Principles of Technical Analysis by going to bitcoinacademy.teachable.com. You can find a link in the description box down below. You can type Club DeFi into Google. That will bring it up. Or you can go to the cryptojebb.com website. It'll be there too. You can go any of those places and you can get access to Club DeFi's Principles of Technical Analysis today so that you can get started on your journey of learning cryptocurrency technical analysis so that you can make money in these markets. Because I kid you not, I've been in the space for almost 6 years. And one of the most profound things I've ever learned is that without technical analysis, you will have no understanding of these markets. You can read the news as much as you want. You will have no understanding of these markets if you don't have an understanding of technical analysis. It's that simple. It is foundational. You can try having a marriage without talking to your spouse. See how that works out. Try having a successful career in cryptocurrency. You will fail without technical analysis. That is the best analogy I can give you. Try being an athlete and you aren't willing to get off the couch. Try putting on weight and you don't eat anything. Try living and you don't drink water. It won't work. You will not succeed in crypto without technical analysis. I don't believe it's possible. So I want you to learn at least the basics of technical analysis, and you can do that by watching this channel. But if you want to learn TA, the best thing to do is by watching all the videos in Club DeFi's Principles of Technical Analysis, taking notes on them, and really learning. Because I think you'll be blessed for it. And we created it not to make a bunch of money for ourselves, but so that we could keep the lights on and continue bringing you guys everything that you need for financial sovereignty. This is about you. Right? This is about you and your journey. And if you want a successful journey in crypto, you've got to have technical analysis. It's that simple. You don't want to hike the Appalachian Trail without a good pair of hiking boots, do you? You don't want to cross the ocean without a good boat that you're not going to drown in, right? You don't want to fly across the country in a plane that's going to crash. You don't want to work in cryptocurrency without technical analysis. That simple. Easiest sell in the world. It's so simple. You've got to learn TA. This channel is here to help you along, but if you really want to learn, best place to go is through the academy that has taught thousands and thousands and thousands of students, those being our educational products. Club DeFi is one of them. Make sure to check it out with the link in the description box down below. If you're in CT2A, you've got a 25% off coupon code waiting for you. Shoot us an email, support@cryptojebb.com. We will give you that code, and you can get 25% off because you are an alumni of CT2A. If you're in Club DeFi's beta, where we are testing beta testing the monthly subscriptionary model, you can get a coupon code equivalent to however much money you put into the beta. Some people have gotten $175 off for that. So don't forget, you can shoot us an email, support@cryptojebb.com for that purpose as well. Please be a little bit patient with us, guys, because we are a very small team, and we're also getting ready to welcome our daughter into the world in probably the next week. So we're trying to stay on top of emails. I do apologize. A few of them slipped through the cracks, but we're trying to keep up as much as we can while also having a 2-year-old and getting ready to bring a newborn into the world. Pray for me, because it might be hard for me to be as articulate on 3 hours of sleep for the next 6 months after our baby gets here, but I'm very excited nonetheless. All right, let's read chat. All right, we've got 1,000 people watching, guys. Thank you so much for tuning in. Let's see, we've had some super chats. Jumper DCS World donated $5, said, Jebb, what happens with the Middle East takes only Bitcoin for oil? Yeah, that would drive it through the roof. Absolutely. Absolutely, that drive it through the roof. That would also bring some very interesting implications because you get OPEC meddling too much with Bitcoin, and then you may end up seeing some hostility from the United States, or at least the United States constituents. X Vega donated $10, said, I am able to buy a whole Bitcoin in April. I way long trying to buy a whole coin all at once. You'd be much better off. You would be much better off dollar cost averaging and getting started on that now rather than just waiting to buy the whole thing. Because to be honest with you guys, by April, Bitcoin could very well be sitting at $34,000. So you may end up missing your chance to buy a whole coin because you might need a few thousand more dollars and you wouldn't be getting as good of a price. So I couldn't exactly tell you. What you might mean is that you are dollar cost averaging, and by April you will have gotten to a whole Bitcoin. But nevertheless, I would encourage dollar cost averaging, not just buying in a lump sum if you're buying with nothing but a lump sum. There's nothing wrong with buying a lump sum, but just be careful and do your own research, of course. The Truth Trill, the Truth Trill, it's a cool name, donated 99 cents and said, 100. Keep it 100. Who knows that song, Keep It 100, by, song, not the rap song. It's by, how'd that song go? Man. Forgiveness, it's a Christian song. I've listened to it 1,000 times before I realized it was a Christian song. It's actually a Christian song. Keep it 100 now. Keep it 100 now. Now. Tell me if you guys know that song. I bet one of you has heard of that song before. Alex is a Jebbi youngling. Welcome to the stream, my friend. Thank you so much, Alex, for becoming a Jebbi youngling. Welcome, 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 my friend. Everybody give him a heart in chat. Thank you, Alex, for becoming a Jebbi youngling and supporting the channel. Marty Maisie said, do the principles of Club DeFi apply to the stock market since it's all TA? I'll answer that question this way. Technical analysis was developed for the stock market. Technical analysis is not a foreigner in the stock market. Technical analysis is a foreigner in crypto. Technical analysis was developed first through the tracking of rice prices in Japan in like the 1870s, I think it was. And then it was perfected, and not perfected, it's always been. It started to develop very seriously in these little charts that they would print out in newspapers. And they would get sent in newspapers in the 1920s, back when you had the Dow Jones, you had the technical analysis that was being done on these printed price action charts. So you'd have somebody at the stock exchange that was in charge of charting with the candlesticks, and they'd send a physical copy, and people would draw their lines and draw their moving averages and draw their MACD and calculate it by hand on newspaper. The stock market. It has been adapted to crypto because there are a few things that are different, but technical analysis is 99.5%. It's taught in Club DeFi to the stock market, and as you saw in today's stream, I apply them to the stock market every day. They're not two different languages. They're the exact same language. It's a bit like, let me put it this way. It's almost like speaking English. There's not even this much variance, to be honest. It's written, you'll go to America, and you might say one word a little bit or even more similar than those two languages would be. All right, guys, I'm going to go ahead and read a couple more chats, and then we're going to have to wrap it out here. Goodness, people are saying I'm lagging. I don't know why that is. I'm sorry, guys. We have literally gig internet. We have the best internet in the entire world. Thank you so much. Eric Taylor, that's where is course? Go to .com. Go to Jebb.com as well. You see, just cryptojebb.com. You can scroll right down here and hit Club DeFi's Principles of Technical Analysis right there. Boom. All right, guys, and if you have any other questions on that front, definitely let us know, and we will be more than happy to give those to you. I'm sorry that we're having lag, guys. I don't know what's going on. I will go ahead and the last one of you for watching. Peace.
Oh, I got a real good feeling.